I've seen retirees lose $400 a month and never understand why. Last spring, a retired school teacher named Carol opened her Social Security statement and saw something that did not make sense. Her monthly check had dropped by $412. There was no warning. There was no phone call. The accompanying letter said only that her benefit had been recalculated due to a, quote, prior administrative adjustment. Carol did what most people would do. She called the SSA. She waited 47 minutes on hold. The representative was polite, professional, and informed her that the adjustment was based on a rule called the government pension offset, which had reduced her spousal benefit because of a pension she received from her years as a public school teacher. Carol asked the obvious question: why was this rule being applied to her now, 18 months after she had started receiving benefits, when it had not been mentioned during her application or her interview? The representative did not have a clear answer. Here is what made the situation worse. 2 months later, the same rule that had reduced Carol's benefit was permanently eliminated by Congress. Carol got most of her money back through retroactive payments. Many others in similar situations did not, because they had stopped paying attention or had moved or had passed away during the years. Their benefits were quietly being reduced. If you or anyone you love has worked even 1 year in a job that did not pay into Social Security, certain teachers, certain firefighters, certain federal employees, certain foreign workers, you need to watch this video to the end. What happened to Carol nearly happened to over 3 million Americans. Some of them are getting money back right now. Many do not know they are owed anything. For more than 4 decades, the Social Security system contained 2 provisions that operated almost entirely in the shadows. Most retirees had never heard of them. Most financial advisors did not understand them. But for over 3 million Americans, these provisions reduced or eliminated Social Security benefits in ways that were almost impossible to predict and even harder to challenge. The Windfall elimination provision, WEEP applied to retirees who had earned a pension from work not covered by Social Security, while also having enough Social Security earnings from other jobs to qualify for retirement benefits. WEP reduced their Social Security check using a modified formula that produced significantly lower payments than the standard formula would have produced. The government pension offset, GPO applied to retirees who had a non-Social Security pension and who tried to claim a spousal or survivor benefit. GPO reduced the spousal or survivor benefit by 2/3 of the non-Social Security pension amount. For many widows and widowers, this provision eliminated the survivor benefit entirely. A widow receiving a teacher pension of $3,000 a month would see her spousal Social Security benefit reduced by $2,000. If her spousal benefit was $800, she received $0. Who was hit? The people affected were teachers, police officers, firefighters, certain federal employees hired before 1984, and Americans who had worked part of their career in countries with their own social insurance systems. They had paid into the alternative pension system instead of Social Security. The SSA had decided decades ago that they should not receive a full benefit on either side of the ledger. The math was brutal. A retired Texas teacher whose case was profiled in 2024, reporting by NPR, lost over $300 a month in expected Social Security spousal benefits because of GPO. A retired Massachusetts firefighter named Robert was told his own Social Security retirement check would be reduced from $1,800 to $1,150 a month under WEP. Both had paid into Social Security for years through second jobs and supplementary employment. The reduction surprised them at the moment they tried to retire. On January 5th, 2025, President Biden signed the Social Security Fairness Act into law. The legislation eliminated both the Windfall elimination provision and the government pension offset for all benefits payable from January 2024 forward. This was not a small change. It affected approximately 2.5 million current beneficiaries and over 700,000 future claimants. The Congressional Budget Office estimated the total 10-year cost at roughly $196 billion. The political coalition behind the law included teacher unions, public safety unions, and bipartisan Senate sponsors who had pushed for the change for over 20 years. For people like Carol, the practical effect was direct. Benefits that had been reduced under one or both provisions were restored. The SSA began processing retroactive payments throughout 2025. By early 2026, the agency had distributed retroactive checks averaging several $1,000s per affected retiree, though some retroactive amounts reached tens of thousands of dollars, depending on the duration of the reduction and the size of the original benefit. Two facts about the implementation matter for anyone watching this video. First fact, the SSA did not automatically identify every affected person. Some retirees had to file claims to receive the corrected benefit. Others had to file inquiries to confirm whether they were eligible. The system was overwhelmed for most of 2025. Many cases are still being processed in 2026. Second fact, some retirees who had been affected by WEP or GPO died before the law was passed. Their surviving family members may still be entitled to retroactive amounts owed to the deceased. This requires a specific claim from the family, and the family typically has to know to ask. Nobody calls them. If any of the following descriptions match your work history, you may have been affected by WEP or GPO. You may be entitled to a corrected benefit or to retroactive payments under the Social Security Fairness Act. Description 1. Teachers in non-covered states. You worked as a teacher in any of the 15 states where public school teachers do not pay into Social Security. Those states are Alaska, California, Colorado, Connecticut, Georgia, partial, Illinois, Kentucky, partial, Louisiana, Maine, Massachusetts, Missouri, Nevada, Ohio, Rhode Island, partial, and Texas. If you spent any meaningful portion of your career as a public school teacher in one of these states, WEP or GPO likely applied to your description 2. Public safety personnel. You worked as a police officer or firefighter in a jurisdiction that did not participate in Social Security. Many state and local public safety departments operate their own pension systems instead of Social Security. If you have a pension from such a department and you also have Social Security earnings from other work, you will likely affected description. 3. Federal employees under CSRS. You worked as a federal employee under the Civil Service Retirement System, the federal pension system in place for employees hired before 1984. Federal employees hired in 1984 or later are under the Federal Employees Retirement System and pay into Social Security normally. Description 4. Foreign pension recipients. You worked part of your career outside the United States in a country with its own social insurance system, such as the United Kingdom, Canada, Germany, or France. If you receive a foreign pension and also receive Social Security, WEP may have applied to you. Description 5. Spouses and survivors. You are the spouse, ex-spouse, or widow of someone in any of the above categories. GPO would have applied to your spousal or survivor benefit, often eliminating it entirely. If any of these descriptions apply, the action step is direct. Log into your My Social Security account at SSA.gov. Compare your current benefit amount to what your benefit was in December 2024. If your current benefit is meaningfully higher, the law has already been applied to you. If it has not changed, or you are not yet collecting, and you are planning around an old WEP or GPO calculation, contact the SSA directly to confirm your situation. Use this exact phrase when you call. I want to confirm my benefit reflects the elimination of WEP and GPO under the Social Security Fairness Act. Going back to Carol, the retired teacher whose check dropped by $412 in 2024. Her experience is worth following because it represents what hundreds of thousands of retirees lived through in the year before and immediately after the Social Security Fairness Act passed. Carol called the SSA after seeing the reduction. She got a polite but vague answer. She called again 2 weeks later. She got a different representative who confirmed the GPO had been applied retroactively because her teacher pension had triggered a review of her file. She was not given a clear path to dispute the calculation. She was told the rule was the rule. Carol then did 3 things that turned out to matter. She wrote down every conversation with the SSA, including dates, times, names of representatives when she could get them, and what she was told. She kept copies of every benefit statement, including the original one before the reduction, the letter announcing the reduction, and the calculation worksheets when she eventually obtained them under a Freedom of Information Act request. She joined an online community of retired public school teachers who were sharing information about the GPO reduction and tracking the legislative push to eliminate it. When the Social Security Fairness Act passed in January 2025, Carol's documentation made her case one of the cleanest to process. She received her retroactive payment by mid-2025. The total back payment was roughly $6,800, plus her corrected monthly benefit going forward. Other retirees who had not kept records or who had simply accepted the reduction without challenge faced longer delays. Some were still working through their cases. In early 2026, the lesson is not that the SSA is hostile or malicious. The agency is overworked and under-resourced. The lesson is that benefit recipients who pay attention to their statements, who keep records, and who ask questions end up with better outcomes than those who assume the system is automatically correct. The government pension offset is gone. The windfall elimination provision is gone. But the broader pattern that produced Carol's problem, hidden rules that reduce Social Security checks without clear warning, has not disappeared. 3 other provisions still operate quietly today. Any one of them can reduce a check by hundreds of dollars a month. High Rule 1. The earnings test. If you claim Social Security before your full retirement age and you continue to work, the SSA withholds part of your benefit when your earned income exceeds an annual threshold. In 2026, the threshold is approximately $24,000 in earnings if you are under full retirement age for the entire year. The SSA withholds $1 of benefit for every $2 earned above the threshold. Many retirees discover this only after they have been working part-time for several months and notice their check is suddenly smaller or has stopped entirely. But the withheld benefits are eventually credited back through a recalculation at full retirement age. The cash flow disruption catches people off guard regardless. If you are claiming early and you are still working, check the earnings test thresholds for your specific year. The thresholds change annually with the cost of living adjustment. Hidden Rule 2. Income-related Medicare adjustments, IRMAA. If your adjusted gross income exceeds certain thresholds, your Medicare Part B and Part D premiums are increased. The premium adjustment is deducted directly from your Social Security check. For higher income retirees, this surcharge can reduce a Social Security check by several $100s a month, and it is calculated using tax returns from 2 years prior. A retiree who sold a business in 2024, or who did a large Roth conversion, or who had any other one-time taxable event, can find their Social Security check reduced significantly in 2026 because of that earlier year's tax return. IRMAA is appealable in cases of life-changing events such as retirement, marriage, or the death of a spouse. The appeal must be filed using SSA form, SSA 44. The SSA does not adjust the surcharge automatically when a life event occurs. Hidden Rule 3. Federal and state income tax, withholding up to 85% of Social Security benefits are subject to federal income tax depending on your combined income. Many retirees fail to withhold tax from their Social Security checks and discover at tax time that they owe a significant amount. Some retirees choose to have tax withheld at a rate that is too high and receive smaller checks than they need to. Both errors are fixable through Form W4V, which sets the federal withholding rate from Social Security benefits at 0, 7, 10, 12, or 22%. In addition, a handful of states still tax some portion of Social Security income. though the list has been shrinking. If you live in or are considering moving to one of these states, factor the state tax into your retirement income planning. The Social Security system runs on millions of small calculations and dozens of rules that interact in ways most people never see. Carol's experience is not unique. It is what happens when a complex system runs on autopilot through a person's retirement years without active attention from the beneficiary. 4 habits protect retirees from being quietly cut and from missing money they are owed. Habit 1. Review your statement twice a year log into SSA.gov. Look at your benefit amount and compare it to your previous statement. Most quiet adjustments show up as a change in the monthly amount with little or no explanation. If you do not look, you do not see them. Habit 2. Keep every communication. Maintain a folder, paper or digital, with every Social Security communication you receive. Letters, emails, screenshots of online account changes, dated notes from phone calls. If a future correction is needed, the documentation will be the difference between a smooth resolution and a multi-year fight. Habit 3. Ask questions when something does not match. The SSA will not initiate a conversation about a reduction. They will respond to one. If your check changes and you do not understand why, request a written explanation. Federal regulations require the SSA to provide one. Habit 4. Subscribe to one reliable policy source. Subscribe to 1 or 2 Social Security policy newsletters or feeds. The Center for Retirement Research at Boston College publishes regular updates. The National Academy of Social Insurance covers proposed changes. Major changes to Social Security typically take years to pass and are signaled well in advance to anyone who is paying attention. Carol's experience ended well because she paid attention and kept records. For every Carol who got her money back, there is another retiree who did not, simply because nobody told them to look. The Social Security Fairness Act eliminated 2 of the most punishing hidden rules in the system. The system itself still runs on rules most retirees have never read and rarely understand. The protection is not legal expertise. The protection is attention, documentation, and the willingness to ask questions when something does not match what you expected. 3 quick action steps before you close this video. Action 1. Log into your My Social Security account at SSA.gov today, not someday. Look at your current benefit amount. Confirm it matches what you remember from your last statement. Action 2. If you or your spouse Ever worked in a job that did not pay into Social Security, even briefly? Make a phone call to the SSA this week and ask whether your benefit calculation has been updated for the Social Security Fairness Act. Use the phrase, "I want to confirm my benefit reflects the elimination of WEP and GPO." That single phrase will route you to the right department. Action 3. Share this video with one person you know who is retired or close to retirement. The information may not affect you directly. It almost certainly affects someone in your life. In the comments, answer one question. Have you ever had a Social Security check change without a clear explanation? The answers to that question matter. They show how widespread the silent adjustments really are. Next video on Tuesday covers Medicare and the 3 biggest enrollment mistakes new retirees make in their first year, including one that costs an average of $4,000 to fix. Subscribe so you do not miss it. See you then.